Well, happy Monday, February 26th. I want to bring you the latest data here in the Austin metro area. We're going to start with some January data. These are 5-year trend charts. I'm also going to share with you the latest interest rates and also if we're seeing prices start to go up this spring, at least in terms of median home values. So hang out for that. So this is looking at January in our 5-county area. The little orange dot here at the bottom is kind of where January finished. So it gives you an idea in terms of total number of home sales. We had about 1,800 sales, just a little bit higher than we saw in 2023. That's just number of sales. Sales volume is if you added up the total price. Again, just a little bit higher than we saw in 2023 in terms of volume. Median sales price. So we were at 429.5, if you want to call it that, to end the year. That puts us, pretty much at the bottom, maybe a little better than November of last year, but typically lower, I would say, than all of 2022, which is the dark purple line, and almost all of 2023. So we had seen prices since the peak of the pandemic, which peaked out around May 2022. We'd seen prices come down last year. They did come down, especially the second half of the year after going up mildly in the spring. And so that's kind of where we're starting the year. We'll say 429, 430 on median home price. Average sales price is always higher because the more expensive homes are going to pull that up. But we're sitting about 535 for the average sales price for the MLS area. Charts look pretty similar there. Total listings. So we're starting the year just a little bit higher than we did last year. Not too much, but we're going to watch inventory this year and kind of see if rates continue to stay high for long. I do expect we're going to have higher inventory. When rates eventually come back down and the jobs can stay strong, meaning the economy and people are employed, then I think you'll see inventory tighten up a bit. But if rates are coming down because people are getting laid off and we're in a recession, I think all bets are off. So yes, rates coming down should spur buyer demand, but only if the buyers are still out there employed. So we need to watch that. And then months of inventory, again, sitting around 3 months of inventory. So this is going to give us a closer look. This is now in real time, original price, which is green versus the actual sold price. This is just calculating everything in the market. So you can see the prices. This was February last year. The median asking price was about 530 in the market, and it came down, 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 down. We kind of dropped to about 459. That's about 80 grand in asking price. So you can see over the course of last year, as rates went up, it just put a lot of pressure on the market. Prices had to keep coming down. Sales were pretty strong in the spring. This is sales price, meaning the closed sales is blue. We peaked out last year in June around 475. But of course, rates kept going up that second half. And you can see the blue line dropped. We had a little bounce in December, but let's say we started this year. We finished off January around 425 for closed sales. This is February. So we've seen the list price tick up a little bit, and we're seeing the closed sales tick up about 20 grand. So right now we're closing about 20 grand higher than we did in January. That is typical. As you can see, we go back to February, 441, March, 460. That's about 19 grand. Went up just a little bit, actually stayed pretty flat as we went into April, ticked up again in June up to about 475. So I expect, maybe not in a straight line, but I expect we're going to see price go up in the spring. One thing that could affect that, though, is going to be mortgage rates. So what we've seen with mortgage rates right now, we're still above 7%. Depending on what kind of loan product you're getting, you could still get down into the 6s. But that 7 mark is really psychological. It is taking some buyers out of the market. And more importantly, the buyers that are still in the market, it's going to slow them down. It's just making them take a little longer, maybe come in a little lower on the seller on the price, or ask for concessions because it is a higher rate. I'll show it to you in a chart. So this is the 30-year fixed rate going back to October of last fall through today. So obviously, this is when rates were still going up, peaked at 8. But since that, it was really creating some tailwinds. Rates were coming down. We got right before Christmas, we dropped down into the mid 6s, and we stayed in the 6s through December, through January, all the way to February 1st, we were at 6.6. And that was creating some really great energy. Buyers were pouring back into the market. It was feeling great. Since then, rates have gone up. They got back to 7% in early February, and we basically stayed at or above 7% throughout the month of February. And as the weeks are going on, that 7% is just slowing buyers down. It's still a better market than it was last year. It's still a spring market. We're still seeing energy. We're still getting lots of people at open houses and making offers. But what's happening is it's coming down at a lower volume. So probably some buyers are sitting back, or they're just taking a little longer to make decisions because that rate is high. And they're hoping, maybe if I wait a week, it'll come back down. Maybe if I wait another week, it'll come back down. And so that 7 is kind of a psychological mark. So let's watch that. I think if it bops back down into the 6s, I think that'll be a positive tailwind. Of course, the longer it hangs out in the 7s, it's just going to be a little bit of a drag on the market. If you're a seller right now, I think the impetus is still good. We're still in the spring market. This is when the activity takes place. We're typically going to see more listings come to market as well. So I do expect we're going to see more sellers over the next few weeks. As we get towards spring break, you're really going to see kind of more sellers come to market. I expect we're going to see more buyers as well. The real question is just where's that supply and demand balance? I do feel that we're tightening up a little bit on the new construction because they're not stuck with as much inventory as they did last year. So that's helping tighten it up, hopefully move the market a little better. So we're going to be watching that. Of course, if you're a buyer, we just talked about interest rates. I always say you got to get with your lender up front, make sure you really understand kind of where your buying power is, and understand that rates are volatile. They could go up another quarter point or another half point before they ultimately start to come back down. So know your buying power and understand that you're going to have a couple options. If you're competing on something brand new to the market, you may need to be coming in with a strong offer. Whereas if something's been on the market for a while, you may have more negotiating power. Take a look at all this. Obviously, if you want to follow our videos, you can check them out on YouTube each and every week at Ryan Kelly Group on YouTube. You can find all the videos there. And of course, if you know somebody looking to buy, sell, or invest in Austin, now is the time. We'd love to talk with them and figure out their strategy, help them get a great property in the market. Until then, hey, we're going to hit March this week. And more importantly, one of my favorite days of the year, daylight savings, is coming up in a couple weeks. Finally get that evening sunlight back. So I'm looking forward to it. Hope you enjoyed the video, and we'll talk to you next week.